The Supreme Court has struck down Trump-era tariffs on steel, aluminum, and Chinese goods, marking a dramatic shift in the nation's approach to international commerce and trade regulation. By ending this major chapter of protectionist trade policy, the court has sent shockwaves through industries that have relied on these tariffs for years. This 6-3 decision rebalances power, sharply limiting the president's authority to impose tariffs unilaterally and reasserting Congress's constitutional role in shaping the nation's trade laws. The ruling's impact will ripple across the economy, influencing everything from consumer prices and supply chains to the strategies of American businesses and global investors. The tariffs, once a cornerstone of the previous administration's America First agenda, are now history, leaving supporters and critics to debate their legacy. The legal fight pitted manufacturers who benefited from protection against importers and free traders who argued for open markets and lower costs. Now, the nation faces a new trade landscape, one that demands adaptation and fresh thinking from all sides. Congress, not the White House, will set the terms for future trade disputes, reclaiming its authority over international economic policy. Broad, unilateral tariffs are off the table. From now on, collaboration and negotiation between Congress and the President will be required to shape America's trade future. The decision forces a more deliberate and political approach to trade, with new checks and balances at every step. Businesses, workers, and trading partners must now adapt to these new rules, rethinking their strategies in a rapidly changing environment. The court answered a major legal question, but in doing so, it opened up new economic and political debates that will shape the future. The full impact of this landmark decision will unfold in the months and years ahead, as industries and lawmakers adjust. American trade policy has entered a new era, with fresh opportunities and challenges on the horizon. The rules of the global marketplace have changed, and the world will be watching how the United States adapts. To grasp today's ruling, let's rewind to 2018, a year that marked a turning point in global trade relations. That's when the Trump administration launched sweeping tariffs, 25% on steel, 10% on aluminum, citing national security concerns and the need to protect American industries from what it called unfair foreign competition. This move marked a sharp break from decades of free trade policy, upending long-standing international agreements and alliances. The focus soon shifted to China, with tariffs imposed over alleged intellectual property theft, forced technology transfers, and what the administration described as unfair trade practices. The result was a full-blown trade war, as China retaliated against U.S. goods and global supply chains were thrown into chaos, affecting businesses and consumers worldwide. The administration's stated goal was to protect American manufacturing, reduce the trade deficit, and pressure China to change its economic behavior. Tariffs made imports pricier, hoping to boost domestic purchases and encourage consumers to buy American-made products. The America First slogan drove the strategy, prioritizing U.S. jobs and industries over global economic integration and cooperation. But the legal and economic basis for these tariffs was hotly debated, sparking fierce arguments in both policy circles and the courts. Critics argued the national security justification was a pretext for protectionism and warned of long-term damage to international relationships. Economists warned tariffs would raise costs for businesses and consumers, leading to higher prices on everyday goods and uncertainty for small businesses. Supporters saw them as vital for key industries and national security. Opponents saw them as a tax on Americans and a threat to economic growth. These arguments fueled lawsuits that reached all the way to the Supreme Court, challenging the president's authority to impose such sweeping measures. The legal battle was about more than economics. It was about the limits of presidential power and the future of U.S. trade policy. Today's decision is the final word on that fight, setting a precedent for how far executive authority can go in shaping trade. With this ruling, the trade war era is officially over, closing a turbulent chapter in U.S. economic history and opening the door to a new phase in global trade relations. The Supreme Court's decision is rooted in a strict reading of congressional authority over trade. The majority opinion found that national security laws were never meant for broad economic protectionism. The justices limited the president's ability to act alone, insisting Congress must explicitly back sweeping trade actions. The Constitution gives Congress, not the president, the power to regulate foreign commerce. The court drew a clear line. Genuine national security threats are different from general economic competition. This restores a traditional separation of powers in trade. Dissenting justices argued the president needs flexibility, but the majority disagreed. The ruling sets a precedent. Future presidents must work with Congress on major tariff decisions. The power to set broad tariff policy is back in Congress's hands. The executive branch's era of unilateral trade action is over. Wall Street cheered the Supreme Court's decision. Stock markets surged, led by manufacturing, retail, and tech companies that rely on global supply chains. The VIX, or Fear Index, dropped sharply, signaling renewed investor confidence. Years of tariff-driven uncertainty are gone, replaced by a clearer economic outlook. Analysts predict S&P 500 earnings could rise as input costs fall and consumer demand strengthens. Tariffs had acted as a tax on imports, raising costs for American businesses. With tariffs gone, profit margins should improve, and prices may drop for consumers. Investors expect this to fuel growth in the coming quarters. Not all sectors benefited. Domestic steel and aluminum stocks fell, facing renewed foreign competition. The market's verdict freer trade is good for business overall. Some industries brace for tougher times, but the broader economy is poised to benefit. The end of the trade war is a turning point for corporate America. Optimism is back on Wall Street. For American families, the end of tariffs means lower prices on everyday goods, from appliances to electronics. The National Retail Federation projects billions in annual savings for consumers. Businesses that rely on imports from small shops to major manufacturers will see costs drop and uncertainty fade. Many companies had to absorb tariff costs or pass them to customers. Now, they can invest and compete more effectively. U.S. manufacturers using steel and aluminum as inputs will benefit from cheaper materials, boosting their global competitiveness. The ruling restores stability and predictability to trade policy. Business leaders say this is as important as the cost savings. Companies can now plan and invest for the long term. The court's decision signals a return to rules-based, transparent trade. For importers and consumers, relief is on the way. The new trade landscape favors growth and certainty. Not everyone is celebrating. For U.S. steel and aluminum producers, tariffs were a shield against cheap imports. Some companies invested billions and reopened plants, counting on continued protection. Now they face falling prices and possible job losses. Labor unions warn that hard-won gains could vanish, especially in states where metals are a major employer. Companies that reshored production during the trade war may now be at a disadvantage. Tariff supporters argue the court ignored unfair foreign practices, especially from China. They see the ruling as unilateral disarmament in global competition. The fight for targeted protections now moves to Congress. For these industries, the future is uncertain. U.S. allies welcomed the Supreme Court's decision, seeing it as a turning point in global trade relations and a sign of renewed American engagement. The EU, Canada, and Mexico, once hit by U.S. tariffs, are now preparing to lift their own retaliatory measures and reset trade ties. Leaders in these countries have expressed optimism that this ruling will restore trust and open the door to new economic opportunities. Japan and South Korea also see the ruling as a return to predictable, cooperative U.S. trade policy, which they hope will foster deeper regional partnerships and stability. The end of tariff friction is expected to strengthen alliances, boost global growth, and encourage businesses to invest with greater confidence. Allied nations hope to work with the U.S. on shared challenges, including China's trade practices and the need for fairer global competition. China's response was cautious. Officials welcomed the move, but remain wary of ongoing competition and the potential for future disputes. Beijing expects continued U.S. pressure on technology and subsidies, regardless of tariffs, and is preparing for further negotiations and possible restrictions. Globally, the ruling should stabilize trade, encourage investment, and help restore confidence in the international trading system. Retaliatory tariffs are likely to fall, giving a boost to international commerce and making it easier for goods to move across borders. The U.S. trade deficit may widen as imports rise, especially from China, but consumers and businesses could benefit from lower prices and more choices. The world is watching how Congress will shape the next phase of U.S. trade policy, with many hoping for a more stable and open approach. For now, global markets are breathing easier, reacting positively to the prospect of reduced trade tensions and renewed cooperation. The trade war's end is a win for international cooperation, signaling a new chapter for global commerce and diplomacy. The Supreme Court's ruling shifts trade power from the White House to Congress. Presidents can no longer impose sweeping tariffs without explicit congressional approval. Trade policy will now be slower, more transparent, and more political. The big debates, balancing low prices with domestic resilience, will play out in Congress. Expect fierce lobbying from importers, retailers, manufacturers, and unions. New trade laws will likely target specific issues, with clearer limits on executive power. The focus shifts from presidential authority to policy substance. America's global economic role will be shaped by negotiation and compromise. The era of unilateral tariffs is over. Congress will set the agenda. The court didn't pick sides on free trade versus protectionism. It decided who gets to choose. That choice now belongs to the American people's representatives.